Greetings. I'm Redan Benedict Alcaide from Group 1, composed of Grace Angelica Donato and Alexander Van Escoto. We're from Section 19 of Applied Math in Ateneo de Manila University Graduate School of Business. Today, we're going to talk about stock investing. So, a word that comes up a lot when you're studying or when you're reading about stocks is equities. So equities basically mean ownership, and we'll get back to that in the next slide. So the stock market really is like a big market in a city where people buy and sell pieces of companies instead of vegetables or clothes. These pieces are called stocks or shares. When you buy a stock, it's like buying a small part of that company, just like when you own a piece of land. The stock exchange is a physical or electronic marketplace where buyers and sellers come together to trade these ownership shares. So basically, you're buying equity here in a company. So now you have a piece of a company. So what? How do you make money off of it? So, how do stocks generate income? And basically, it's done two ways. First is through dividends, and the other is through capital appreciation. So some companies distribute a portion of their profits to shareholders in the form of dividends. Dividends are typically paid out on a regular basis, such as quarterly or annually. And for capital appreciation, basically it's when you buy stock at a lower price and sell it at a higher price. So for example, you bought 100 shares of a company at 4 pesos per share, and you decided and its price rose to 5 pesos per share, and you sell it. Basically that's a net total of 500 pesos. So uh, the profit of that is basically 500 minus 400, so that's 100 pesos in profit if you don't include taxes and brokerage fees. So here's an example of dividends and capital appreciation. Basically, the photo here in the left is basically a notification of from a stockbroker of a shareholder receiving his or her dividends. So here it says that the number of shares entitled to the dividend is 1,000, and the dividend rate is 3.5 pesos per share. So you multiply that and you get a gross amount of 3,500, and deduct withholding fees or withholding tax of 350 pesos, and basically the net profit of that was 3,150 pesos. The example here on the right shows an example of capital appreciation. Basically, the stocks here, everything here is green. Basically, all of the stocks here were bought at a lower price than what they are currently. So earlier we said that the stock market is basically a physical or electronic marketplace. The stock market itself, basically, it's a concept. So uh, later we'll be going through, or we're going to discuss a bit about the stock exchange. That's the physical marketplace of stocks. So here in the Philippines, you need to go through a licensed stockbroker or become one to buy and sell stocks on the PSE. PSE means the Philippine Stock Exchange. So that's the physical marketplace of stocks, basically, at least here in the Philippines. So um, here are a few stockbroker or stock trading platforms here in the Philippines. So you have AAA Equities, Call Financial, and Interactive Brokers. I think Interactive Brokers is an international one. So if you want to buy and sell on other markets, you can use Interactive Brokers. But for for a Philippine stock trading, we have AAA Equities and Call Financial. So Call Financial is the classic one. Its UI looks old, but if you don't actively trade, like if you're not looking at the charts every single minute, and you just want to place money and forget about it, Call Financial will suit your needs. But if you're someone who trades on the stock market regularly and you need support for conditional orders, AAA Equities is uh, a good broker. So, um, as I said, they support conditional orders, and basically, it allows you to execute strategies like cutting losses and buying on breakout automatically. So they can set a trigger on when your limit order is sent to the exchange based on the stock's last traded price. So if a stock falls below a certain point, it can automatically sell that for you. And if it rises above a certain resistance level, you can program it to automatically buy for you. So aside from that, there are other stock trading platforms or stockbrokers here in the Philippines. So here are some gotchas when you're looking for a stockbroker. So here's the top five things to look for. So at its core, there's basically um, four functions, and here this the last one is an optional one, the additional features. So you must be able to deposit money, trade and see the execution, check fees, and withdraw your funds. So when you're um, when you're looking for a stockbroker, you need to evaluate how easy and secure it is to deposit funds into the trading account. Look for various deposit methods such as bank transfers, credit, debit cards, e-wallets to suit your preferences. Um, for trading and execution, you need to see if you need to check if the platform is user friendly and if the execution data is real time or near real time, because that will help you a lot when you want to make trading decisions, especially if you're a high frequency trader. This is maybe one of the main things you'd want to take a look at. For the checking of fees, you need to be able to check basically what they're charging for you. You need to scrutinize the fee structure, including trading commissions, spreads, and any hidden charges. So be cautious of disparities between the advertised fees on the website and the actual fees charged during transactions. Next is withdrawal. So examine the process and time it takes to withdraw funds from your trading account. So a reliable broker should offer efficient withdrawal methods and transparency regarding any withdrawal fees. And last, this one, it's an optional one. You need to check after the four boxes earlier, after we tick that off, you need to check if the broker of the platform of the broker supports additional features, such as what I've said on the previous slide, automatic stop loss and breakout orders, or even a mobile app, because some brokers don't have that. I believe Call Financial doesn't have a mobile app, and it could be cumbersome to use when you want to trade on your phone. So those are some considerations that you may want to take into account when you're looking for a broker slash trading platform. So now that we have that covered, how do you actually buy or sell stocks? So the interface for it may look different from platform to platform, but it basically follows the same steps here. So you need to choose a stock. So um, usually a company's shares or a company's stocks is identified by its stock code. So for example, here we have ABS. ABS is ABS refers to the ABS-CBN corporation. AC refers to Ayala Corporation, and AGI refers to Alliance Global Group Incorporated. There's a list. There's a much wider list on that on the website, or you can check PSE for listed companies. So when you're choosing a stock, usually there are numbers here like bid size and ask size. So bid size refers to the number of shares willing to be bought, and the ask size refers to the number of shares willing to be sold. So bid price is the price that people have offered to buy the stock, and ask price is the price that shareholders have offered to sell the stock. And um, basically, this four numbers is what moves the market up or down. So if um, a lot of sellers like sell at a lower price, for example, uh 4.12 here in the asking, and someone bid 4.12, basically that would drive the last stock traded price. It will drive it down to 4.12. So now we've chosen a stock, we've seen the prices. Now we have to execute an order. So basically, the to execute an order, you just need to enter the stock code and the number of shares and the price. Next, you need to double check your available cash, because if um, the total price of the stock you're trying to buy is greater than your whatever your balance is in your brokerage account, you won't be able to buy the stock. So next, you confirm. So now to execute the order, you could either do two things. So first, you could match it by the asking price. So if someone's selling at 4.14, you could uh, you could enter the price here as 4.14, and that would immediately execute the order, and you'd get the shares. You'd receive the shares. Or you could simply post that order and just wait for the price to go down. So when the price goes down to 4.12, since you've already posted your order, eventually it will execute that order and you'll receive your shares. But the thing is, it doesn't always go down. Sometimes it goes further up, and uh, basically your order won't execute. You won't receive the shares. So um, when you're trading stocks, at least here in the Philippines, there's something called a board lot or a round lot system. So the board lot table determines the minimum number of shares one can purchase or sell at a specific price range. Therefore, the minimum amount needed to invest in stocks varies and will depend on the market price of the security as well as its corresponding board lot. So, for example, a certain stock is valued at 3 pesos. So the minimum number of stocks you can buy is 1,000. So you need to have 3,000 in your balance if you want to buy that stock. But there's also the concept of an odd lot system. So um, you can also buy stocks from the odd lot system, but they're going to be priced differently. Okay, so we've discussed where to buy stocks and how to execute orders. Now, how do you choose a stock or how do you choose a company to invest in? And the answer is simply we're not sure. So, choosing a stock is really both an art and science. And there are a lot of different strategies for it. So, you need to find one that suits you. So there are two schools of thought, main schools of thought when it comes to analysis of stock prices and stocks. So first off is fundamental analysis. So this is basically a technique that focuses on evaluating the intrinsic value of an asset. So it also includes evaluating if a stock is overvalued or undervalued, and it involves analyzing the company's financial statements, management quality, industry trends, competitive positioning, and other macroeconomic factors. So you really have to dig deep into the company's financials and uh, maybe uh, check management quality as well, yada yada. So you're like uh, it's like being a detective. You're really going to every fine uh, detail of that company, and based on your findings, you could then determine what you think is a fair value for the company that you want to invest in. And the other like school of thought when it comes to picking stocks is technical analysis. And usually this is used for short term to medium term trading. Traders using technical analysis are more concerned with exploiting short term price movements and trends rather than the long term intrinsic value of the asset. So mostly this focuses on studying historical price and volume of data of an asset to identify patterns, trends, and signals. It uses data to predict future price movements. So now, on to our last section. What are the pros and cons of stock investments? So, historically, stocks have provided some of the highest long-term returns among investment options. Over time, well-performing stocks can generate substantial wealth. Also, stocks are generally considered high liquid investments or highly liquid investments, meaning you can buy and sell them relatively quickly. So the liquidity makes it easier to access your investment funds when needed. It also provides diversification because it allows you to diversify your portfolio across different industries, sectors, and geographic regions. This can help reduce the risk associated with having all your money in a single investment. And of course, since you're buying ownership, you're buying equity, you become a partial owner of the company. So this might grant you voting rights in company decisions depending on the type of stock you own. So uh, there's something called preferred shares and common shares, but I won't be discussing that in this presentation. And last, of course, as we discussed earlier, another pro is dividend income. So if you buy stocks that are of a company that are consistently providing income, or I mean providing dividends, it can be a consistent income stream in addition to any potential capital gain from the stock price appreciation. And of course, for the disadvantages, we have volatility. So, uh, market prices are subjected to numerous factors like news, management, financial performance of the company, etc. So, returns are really not guaranteed when it comes to stock investments. Also, there's the risk of loss. So, let's say, for example, let's use the reverse scenario of that you bought for 100 pesos worth of stocks at 4 pesos a share. So, basically, that's 100 shares. And the price went down to 3 pesos. So if you sold that at this point in time, you'd net a loss of 100 pesos because you'll only be able to sell it at 300. So next, time and research. Um, as I've said earlier, it's really hard to pick the right stock, whether or not you use fundamental analysis or technical analysis. It requires a bit of financial know-how. So uh, our advice would be to do your research first and um, try your best to limit your losses because stocks have no guaranteed returns and um, it's really because of the uncertainty behind stock investing. A lot of investors don't really make rational decisions and uh, sell on a loss. So these are a quite complex instruments. So suggest to I would suggest to invest money that um, that you can afford not to see for a while because liquidity concerns might force you to sell your stock at a bad time. Basically, that's it. Thank you so much. And please drop a comment below.